You're watching Beyond Markets. Welcome. I'm Kenneth Igbomor, and on today's show, we'll discuss the IMF's regional outlook for sub-Saharan Africa. You can join the conversation with the hashtag Beyond Markets, and you can also follow my handle at Kenneth Igbomor. Now, the International Monetary Fund says it expects aggregate growth for sub-Saharan Africa to pick up from 3% in 2018 to 3.5% in 2019 and stabilize at slightly below 4% over the medium term. I have with me in studio Abebe Selassie. He's the director for IMF, the IMF's African Department, and also Bismarck Rewane, the CEO of Financial Derivatives, and Andrew Nevin, the chief economist at PwC Nigeria. And you're all joining me for this conversation today. Thank you so much for joining me on the show today.
Thank you.
So, Abebe, let me start off with you. I'd just like you to give me an overview of your projections and what you think the key drivers will be and things that will play out.
So, as you noted, economic growth we see accelerating from about 3% to 3.5% this year, and should go up to closer to 4% in the outer years on current policies. Big drivers really are somewhat Nigeria, South Africa, and Angola has been okay for a couple of years, but these countries have been recovering somewhat from the very significant impact that the decline in commodity prices had on them between 2014 and 16. So we're seeing a little bit of a pickup there. But and many other countries in the region continue to grow very rapidly. I think, for the most part, relative to where we were in the earlier part of the decade, the so-called Africa Rising years, what's keeping growth low at 3.5% rather than closer to 5-6% really is the fact that we have these three largest economies, Angola, South Africa, and Nigeria, all growing at very subdued economic growth rates. So they're still working through the effects of the decline in commodity prices.
All right, I see in your outlook you're expecting about 21 countries to grow above 5%, about 5% and above, while you see some other 24 countries, bringing in some anemic growth. I'd like you to speak to the peculiarities for these countries, especially the ones who you don't think are going to grow as fast as the rest of the continent.
So this is a really important point that we bring out. I think, as always with sub-Saharan Africa, there's huge heterogeneity, and this is part of what we try to bring out in our report. So, this aggregate picture often masks the fact that you still have quite a lot of dynamism in the region. So you have about 21 countries growing at 5% or more. So the likes of Benin, Senegal and West Africa, Ethiopia and Kenya and East Africa are all growing at fairly rapid rates. So these countries really have seen a sustained period of growth at 5% or more. What's unique about them is that they're less reliant on commodity exports, at least less reliant on oil or hard metals, and they have a bit more diversified economic structure. This contrasts, of course, with the other economies, the larger economies that I noted, which Angola and Nigeria, of course, are big oil exporters, and South Africa also is significantly reliant on other commodities, coupled with political uncertainties, policy uncertainties, which are holding back growth still well below their potential rates.
All right, so let me bring in Bismarck into this conversation. Bismarck, when you look at the outlook, what comes to mind?
I think it's a bit conservative in its projection, because regional trade is a major issue which was covered in this report. But I think to the extent that a large part of, say, Nigeria and West Africa is driven by the informal economy, I suspect that some adjustments in exchange rates would actually facilitate greater trade between Nigeria and the French-speaking countries and the English-speaking and French-speaking countries. I think the mobile payment system also, which increases the velocity of circulation of money and trade as well as output, will have an impact. So I would say it's a conservative projection, but those two things, which is trade and a much more efficient payment system, will probably be a game changer in terms of being a catalyst for higher growth than is projected.
All right, Andrew, your thoughts on the projections?
Well, first let me commend the IMF. I mean, I think this was really a fantastic report, Abebe, and I think you touched on a number of issues, particularly I think the climate change and the security issues, and we can come back to those later. I just want to pick up on what Bismarck says. I do think that we have a problem with our economic analysis, and we're not capturing enough of what's happening in the informal economy. And it's not a criticism. I mean, it's informal, so it's hard to measure. But we know, for example, I think the headline number is 65% of Nigerians' economy is informal. Part of it's captured in the official numbers, part of it's not. It's not clear. And then sometimes we publish these official statistics about trade that say trade's very little within West Africa, but actually we know there's a huge amount of trade going on. And in your report, you rightly point out a lot of the informal trade is in highly diversified commodities. So I think if we could get deeper into some of this, we'd find, as Bismarck says, actually we're probably a little bit richer than we think in the region, certainly.
All right, then, but before we get into the other segments of this report, I'd just like you to speak, Abebe, on the risk to this outlook.
So, the external environment, of course, is one challenge, which it's been fairly volatile, uncertain, at least with respect to the region. Commodity prices are a very good example. Oil, last year, if you remember, started at around $67 a barrel, if I remember correctly. Went all the way up to $90 a barrel last October and ended the year closer to $45 or so a barrel. I mean, when you have this kind of volatility and you're an oil exporting country, for a Minister of Finance, I mean, that presents huge challenges in terms of managing your budget. So this increased volatility we've seen in commodity prices in the last couple of years, I think, is a challenge for policy making in the region and, of course, for economies. Much the same, really, in terms of financial markets. We've seen a lot of ebb and flow of capital flows to the region. The cost of financing has also been quite volatile. That's another challenge. So depending on how those play out, that could affect the outlook. Domestic factors are always at work. We've seen economies being hit by weather-type shocks, of course. We just had the cyclone Idai, which affected Mozambique and Malawi and Zimbabwe quite severely. So those kind of shocks, have to be contended with. Lastly, I would say security, particularly in the Sahel Belt and Lake Chad Basin, of course, security threat is quite potent, and that's another thing that's having a bearing. All told, on balance, we think growth should continue to accelerate. I hear what Andrew and Bismarck are saying about uncertainty about the data, particularly how we measure the informal economy. I mean, my sense is that there is a lot of activity that's going on, but what also gives me comfort in terms of the numbers that we're projecting is we're using the same measurement with the same types of data. So assuming that there hasn't been a big jump in the unmeasured parts of the economy, what the regular statistics that come out of governments are measuring is what we're relying on. So that gives you comfort. But of course, from time to time, we've had to do discrete adjustments, GDP rebasing, etc., to try and capture what's happening in the region.
All right, then let me move to another part of this conversation. I'd like you to speak to how countries within the continent should respond to this to the outlook from a policy standpoint.
Policy formulation, of course, is very country specific and depends on country circumstances and time context. But one trend we see, which has been playing out, is in the fast-growing countries that I noted earlier. What we've seen is an important driver of growth has been infrastructure investments that governments have been making to try and address their infrastructure deficits. Other public spending has also been elevated, and we see a need basically to hand over the reins of growth from the public to the private sector. So easing off a bit more on spending, government spending, capital investments, and really giving a bit more space for the private sector to be the engine of growth. So I think that handover is going to be very important, including because sovereign balance sheets are becoming a bit more encumbered, debt levels are beginning to drift upwards, so that needs to be contained. In the commodity exporting countries, I think Nigeria, South Africa, private investment is what's been really depressed the last few years. And it's really, really going to be very important to get private investment going. And we think policy uncertainty has been a factor there. hopefully now with elections out of the way here in Nigeria and soon also in South Africa, there will be greater clarity on the policy environment, which will be really very important to foster stronger investment.
All right, then Bismarck, let me get your thoughts first on what he said about the risk to the outlook and also his comments on the policy response.
I think one of the big risks, apart from anything else, is any shortfall in investment, especially in Nigeria on power. If something's not done as to deal with the cost-reflective tariffs, which will allow for major investments at all levels of the power value chain, then there'll be a problem. But if it is done, and I'm optimistic that that will be addressed, together with the metering and all the other things, then any major investment in the power sector could actually lead to a spike in growth, even in the short run, right? For Nigeria, again, and West Africa, the African Free Trade Agreement to allow for, right, could actually, so again, go back to financial inclusion, trade, power. Those are major things. Exchange rate, further exchange rate convergence. Maybe we'll get to unification eventually, but there should be convergence, and because investments are going to be driven by most of the things. And then we'll come back to the whole thing about the refineries and subsidies. So across the region, especially West Africa, Nigeria and the West African countries are victims or beneficiaries of this subsidized pricing of PMS and the abuse of it, the cost-reflective tariffs, and the exchange rate. Those three subsidized factors in pricing will have a major positive impact if the policy audacity is there to address them and address them quickly, or a failure to address them will actually expose the economy to further vulnerabilities, especially the things that are out of control, because there's oil price which is out of control, and oil production can come out of control if there are disruptions. So there's a political risk there, but I'm focusing more on the fact that a delay in making policy decisions at the early part of the administration, which is now, right, and depending on the personalities that are going to be around government, could mean a lot. And if Nigeria gets it right, then by implication, the bandwagon effect on the rest of West Africa and the region becomes I think that's critical. Let's not underestimate the importance of making sure that we have a correct policy mix and a timeline so that we can actually begin to execute.
All right, I need to hold that thought real quick. I just need to go to a quick break, and when we return, we'll continue our conversation. I've been speaking to Abebe Selassie. He's the director for the IMF African Department. Also, Bismarck Rewane is the CEO of Financial Derivatives, and Andrew Nevin, the chief economist at PwC Nigeria. Welcome back to Beyond Markets. Now, if you're just joining us, I have Abebe Selassie. He's the director for IMF African Department, and Bismarck Rewane, the CEO of Financial Derivatives, and Andrew Nevin, the chief economist at PwC Nigeria. And they're with me today, and we're discussing the IMF's regional outlook for sub-Saharan Africa. I'd like to take the conversation to what is more topical right now. We're seeing cyclones coming in there, and I'd like you to speak, to these climate shocks we're seeing in there and the impact it will have on growth.
So I think, as you said, it's very topical. Mozambique was hit by Cyclone Idai about a month and a half ago, and we have the Cyclone Kenneth, of course, impacting the country at the moment. So what we see basically, beyond the human toll that this has exacted on Mozambique and neighboring countries, what we've also clearly going to see is much lower growth in these countries. Agricultural farmlands have been devastated, so people's livelihood is at risk. A major reconstruction effort is going to be needed, both in the urban areas, but also support to farmers. At the fund, we've tried to do what we can, what we could, move very rapidly to provide with some funding to the budget recently, but much more support is going to be needed to try and mitigate this shock, which beyond kind of the impact on growth will also have effects on the budget and the external accounts of the country. So it's difficult. Beyond, of course, Mozambique, I think one concern we have about climate change, and this is a bit more of a slow moving variable, but still one which we think will be impacting greatly part of the Sahel, of course, the whole Sahel belt. Lake Chad Basin, of course, we've seen quite significant impact. From the IMF side, what we try and do basically is to provide a lot of policy advice, some financing. We have programs, for example, for Chad, Niger, Cameroon, and quite a few of the other Sahel countries. And also, of course, technical assistance to try and strengthen resilience, to try and put in place policies that can try and combat this, ravaging effects that climate change is having in the region.
All right, let me throw it to the floor and let my other panelists speak on this as well, because I think it's can be quite devastating when you have a growth trajectory coming up and then things like this just happen.
No, but
Bismarck,
not just growth. If you look at Kenya, I think Uganda yesterday, the inflation numbers. So output falls and prices increase. So you have a growth issue. You're going to have regional inflationary pressures coming up. So it's the climatic conditions. Even in Nigeria, the power situation, Kainji, in April and May, we are beginning to see power constraints coming from Kainji, while we have that of gas as well in Egbe. And indications are that we are going to be seeing inflationary pressures, not just in the East African region, even in the West African region. So if you have higher and rising inflation at the same time as you're having constrained growth, right, then it becomes an issue. And then that leads to external imbalances in terms of exchange rate adjustments that have to be made, because once you have higher inflation output, then one of the things that need to be followed through is to have that adjustment. And countries, especially African countries, are always reluctant to make, and rightfully so for political reasons, to make exchange rate adjustments. The exchange rates are not as flexible as they should be. We've seen that also in Nigeria. Okay, so my thing is that the climatic conditions are constraining growth. I think it's also beginning to fuel some inflationary pressures, which will lead governments to make some policy decisions. Which they need to be courageous enough to make those, to allow for policy flexibility to address these issues.
Andrew, I'd like you to speak to this, and then we've seen quite a number of climate bonds or green bonds come on board in this period, and we've seen other initiatives like climate insurance coming in there. Do you think these measures have been quite enough?
Well, I think to begin with, I mean, this whole situation is a tragedy. So you think of the people, the nations that created the climate emergency that we have, the United States, the developed nations, China in its growth period, and yet the people that are suffering are often the most vulnerable. So it's a very difficult situation. I mean, obviously here in Africa, we need to do what we can. We need the IMF. And we're part of a green financing initiative here in Nigeria. I mean, I think that what is certainly true is that people investing in fossil fuel assets really risk to lose all their assets, stranded assets. The governor of the Bank of England came out. So there is some obviously momentum about that. And what I think IMF and others should be doing is also pressuring the developed nations to move faster. Obviously, with the Trump administration, the United States has gone backwards, but in a way, it may turn out to be good for this issue because he's highlighted, by being so oppositional to climate change, the rest of the world is moving on, and we need the progress in that. In terms of Africa, yeah, I do think we're going to have to come up with more kind of resilient policies. I mean, I think the word resilience was not used 5 or 7 years ago, so it's just entered in. People are starting to think about it. Lagos itself has the Resilient Lagos program. Yes. I mean, we're in danger of being underwater in 30 years or 40 years, and how do we cope with that essentially as a water city? But some things are happening in Africa, and I think Africans are committed to the issues around climate change. But we really need, I mean, if we rise 3, 5, 7 degrees in the next century, Africa's, what's going to happen to us?
All right, then. So let me move this on to another conversation now, which is debt. So very interesting statistic jump at me from the report, talking about the fact that on average you were saying about the average debt to GDP ratio, debt to GDP for sub-Saharan countries about 56%. I'm looking at that and I'm thinking, what can African countries do to reduce the amount of debt?
So, again, you're right to note that on average debt to GDP ratios in the region have gone up from about 35% 2012-13 to about 56% now. But this average, again, masks quite a lot of differentiation across countries, and the debt to GDP ratio is one metric that you need to assess, that you can use to assess the degree of indebtedness, but there are other metrics. So, you have to look at it holistically and on a country-specific basis. Clearly, debt vulnerabilities have risen in the region, and that's why I was making the point earlier about more of a balance needing to be struck than has been the case in some countries recently. The balance I'm talking about here is, on the one hand, continuing to address the investment needs that our countries have in health, education, infrastructure. The amount of development spending our countries have to make is really quite significant. But this also has to be balanced with avoiding debt sustainability problems. Why? If debt gets out of hand, of course, you're unable to pay it, then the investments you're making are unsustainable. And the last thing we need is roads that are half built, cannot be completed because the government's run out of money and they fall to disrepair. So this balance is really important in general. In terms of the picture overall, what we've seen is like 7 countries are actually in a debt distress situation in the region, and they tend to be fragile countries, generally been hit by oil shock, by the recent shock or a conflict. Again, what's needed to really avoid this becoming more widespread is policy reforms to try and strike a better balance between development spending and avoiding debt sustainability. And there are ways that this can be done. Revenue mobilization, of course, is one such thing. Nigeria, for example, although it's not in the debt issues are not as big here, it's still a country, I think, which is prime example of what I mean by revenue mobilization. At well below 5% of GDP, the non-tax revenue mobilization is very, very low. Nowhere near enough to what's needed for the country to address its huge infrastructure deficit, to invest more in health, in education. So there are things like, reforms like that can be done to try and create the fiscal space and rely less on debt.
All right, then, Bismarck, I'd like you to chip in on this one as well.
I think, yes, there's a debt issue, but you've got to look at it in terms of these are liabilities and what have the debt been used to do? Is there a correlation between the debt growth and productivity growth in the continent? When you look at that, you can see averagely, I think there's been some improvement in productivity. There's been some improvement in, of course, the growth itself, and the type of debt mix, and the policy that you use to actually service this debt. Yes, there are distress situations, but when you look at Africa in general and look at South Africa, Nigeria, Angola, yes, there's debt, but debt now is not just used for consumption. Debt is now being targeted at projects. Do these projects have any direct impact on labor productivity and total productivity growth? When you look at those two things together, I think that Africa is doing much better, but still ways to go. So I don't want to look at debt in isolation and say, oh, debt to GDP. We have to look at it in the context of.
All right, then let me get Andrew's take on this as well. But I'd also like you to also comment on, where you think as a continent we should be looking more. We should be looking more to the West for borrowings or China.
Well, I think on this issue, it relates back to what we were talking about in the informal economy. I mean, to the extent that we can bring more people into the formal economy, we're going to have more tax revenue. But we can't force people out of the informal economy into the formal economy. There's got to be benefits from the formal economy. And to close some of this deficits or reduce the risk of a debt problem, I'd like to see the governments focus more on why people are not part of the formal economy and make it more attractive. And I lived in China for 10 years. You get that virtuous circle where the economy is growing, more people are joining the formal economy, and then tax revenues going up, the government can do more. We need to get into that in every country. Certainly it's been a challenge in Nigeria. I think with respect to where we get the borrow money from, because we need capital from outside of Africa. I think the IMF report did a very good job of unpacking, as Abebe said, it's the kind of differentiation. We have a lot of different sources of debt and a lot of different structures on it. I don't have any problem with us interacting with China. I think as we get stronger and smarter about that's fine. Any problem with interacting with the West. I do think also, though, one of our most significant partners increasingly will be India, because if you really look at the structure of society, of African society, the Indian society, they actually have the most similarities versus the West and versus versus China. So I think we should be sourcing capital from around the globe. And I think that one of the, we haven't come to it yet, but one of the issues around the AFCFTA is for us to come together as a bloc to face off against, you know, these different regions and that. But, you know, we need to make sure that we're strong enough and smart enough that when we take debt, we take investment, we're taking it on terms that are advantageous to Africa.
All right, then. Thank you so much for your contribution. I'm afraid that's all we have time for on this episode, but we'll continue our conversations in another episode of Beyond Markets. I've been speaking to Abebe Selassie. He's the director for the IMF African Department, and also Bismarck Rewane, the CEO of Financial Derivatives, and Andrew Nevin, the chief economist at PwC Nigeria. And that's it on Beyond Markets for today, and thank you so much for joining us. Remember, you can watch this show at 5 p.m. West African time daily and have access to all previous episodes of Beyond Markets on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets and follow me at my handle at Kenneth Igbomor. Have a wonderful day.